Supermicro Computer has been getting all of the attention in the last couple of weeks. The stock is up over 10x year over year, and it's going to be included in the S&P. But another big player that has suddenly popped up on everyone's radar is Dell Technologies. Now, Dell, of course, is not a new company. It was founded in 1984, but as you will see, their business has been accelerating as well. Stock is up 218% year over year. Now, I've previously shown you the difference between HPE, Dell, and SMCI, Supermicro Computer. Valuation-wise, of course, right now, stocks have gone up. Valuation has changed. Companies have reported their earnings, but let's compare it yet again. Let's compare Dell Technologies right now to Supermicro Computer. Dell Technologies market cap of $88 billion, while Supermicro has a market cap of $60 to $62 billion. Now, if you look at the forward PE, Dell Technologies 16.6 times, while Supermicro is at 33.5 times. Of course, both of those are higher than their 5-year mean. And the same can be said for each and every other metric under EV to EBITDA, price to sales, price to free cash flow. You can clearly see here that all of those metrics right now, they are higher than the 5-year mean, meaning currently the company is getting a higher premium from the market compared to what it's used to get a couple of years back. Now, there's one metric that we can look at and maybe understand why Supermicro gets a higher premium than Dell, and that's the price earnings to growth ratio, or PEG. You can see here SMCI sits at 1.46, while Dell sits at 2.56, meaning SMCI is expected to grow faster. But does that mean that everybody should be chasing Supermicro Computer and leave Dell behind? In my opinion, no, because one company also has higher gross margin than the other. Of course, Dell also deals in a more consumer-facing products, right? We all know Dell products, PC laptops, stuff like that. But there's more to the story. I do think that this is something to keep an eye on, especially with all the AI craze. Of course, you might say this is purely driven by AI hype, but I do think we're still in a cycle of growth, especially when you're going to see their latest reports and the comments from the earnings score. Now, before doing that, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. Want to support me even further, do check out the link down in the description and in the pinned comment to get a top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So if we go and look at Q4 and fiscal year 2024 highlights for Dell, you can see that although the stock is up quite a lot, year over year, revenue is down, operating income, non-GAAP operating income is down as well. If you look at the consumer solutions, the infrastructure solutions, their revenue is also down year over year for the quarter and for the full year 2024. But as always, the markets are forward looking, and these results show a sequential improvement, meaning quarter over quarter, these metrics are improving. Cash flow from operations in Q4 reached $1.5 billion, and for the full year that reached $8.7 billion. They reduced non-GAAP operating expense by over $1 billion in fiscal year 2024. They also say that Q4 AI demand was strong, with AI optimized server orders revenue up 40% sequentially, not year over year, sequentially. Then with regards to the margins, gross margin here, $5.31 billion, with a gross margin as a percentage of revenue, 23.8%. Year over year, that is down. Quarter over quarter, we are seeing an improvement. For the sake of this video, if we go and look at Supermicro's quarter, we can see here gross margin was 15.4% compared to a quarter ago, and 18.7% in the same quarter last year. So margins here are already lower, and also lower quarter over quarter and year over year. Now, looking at server share, mainstream server share, and especially the opportunity ahead with regards to hardware and software. So they say here AI hardware and services represent a $152 billion opportunity by 2027. That's a 20%, over 20% CAGR from 2023. Now, with regards to mainstream server share, they show a trailing 12 months Q3 2023 and all the way back to Q3 2013. Yes, they did gain 5 percentage points over the past 10 years, but they did also lose 4 percentage points since 2022. With regards to trailing 12 months storage share versus the nearest competitor, as you can see, Dell dominating. Now, with regards to the client-facing segment of the business, the client solution group, Of course, we know that there is weakness in the PC market. We've seen that with AMD, with Intel, and others as well. They say here PC market has declined for 8 consecutive quarters, and it shows. Q4 operating income was 6.2% of revenue, up 120 basis points year over year. They expect PC market to recover in the second half of 2024, and they're excited about changes coming to the PC in 2024, including AI on the PC and Windows on ARM. Before touching more on that, they also announced a 20% increase in annual cash dividend to $1.78 per common share. Now, coming back to the PC market, this is something I've been talking about with regards to Intel and AMD as well. Second half of the year, Windows 12 is supposed to release. Huge refresh cycle will happen. Not only that, you've got Windows on ARM. You also have a new player, Qualcomm, coming out with their AI chips for PC. It's going to be a very, very interesting new refresh cycle going forward. Companies like Dell will definitely gain from that. Of course, this is only for the second half of the year and onwards, so it remains to be seen if there are any delays or not and what demand truly is when we reach that point. Now let's go over a couple of things that were mentioned in the earnings call. So in Q4, they saw AI optimized server orders increase by nearly 40% sequentially. They shipped $800 million of AI optimized servers, and our backlog nearly doubled sequentially, exiting the fiscal year at $2.9 billion. Demand continues to outpace GPU supply, though we are seeing H100 lead times improving. This is something we've been hearing from NVIDIA as well. They are also seeing strong interest in orders for AI optimized servers equipped with the next generation of AI GPUs, including the H200s and the AMD chip as well. Most customers are still in the early stages of their AI journey, and they are very interested in what we are doing at Dell. This is basically them hinting at, well, we're still early in this cycle, despite a lot of people thinking we're at the top of the AI hype cycle. With regards to the customer solutions group, we remain optimistic about the coming PC refresh cycle as the PC install base continues to age. Windows 10 reaches end of life later next year, and as I said, Windows 12 will come out as well. With regards to the storage business, that will benefit from the exponential growth expected in unstructured data, and we are bullish on the coming PC refresh cycle where we are well positioned. We are optimistic about fiscal year 2025 and expect a return to growth above our long-term framework. Again, markets are forward-looking, so comments like this are always very much appreciated. The last thing here, looking at the graph, of course, as I've shown you at the start of this video, year-over-year growth quite remarkable. But then if you look at mid-2023 until today, the stock has more than doubled. Now, what's interesting is that since that jump here in August 2023, the stock has been overbought for quite a while. Yes, we had a couple of dips under it, but RSI was always extremely high or overbought since then. Now, right now, we are way more overbought than before, but as I keep saying, a stock can stay overbought for quite a while, just like a stock can stay oversold for quite a while as well. It's very important to follow the business behind the ticker and not just a ticker. Now, if you're interested, the 200-day moving average sits at around $70, the 51 at $85, and the 21 at $94. If you're looking at better entry points, those are the ones right now. I don't really see any signs of this business slowing down or the stock crashing 20, 30, 50% anytime soon. So that will be it for this video. You've got Dell, who has been performing extremely well right now. It seems like Dell might be in a point where Supermicro has been maybe 1 or 2 or 3 quarters ago. Of course, all the attention goes to Supermicro computer. Similar, but there are some differences in their business, especially the consumer-facing one. So choose which one you want to ride the, let's say, AI hype cycle with. Or not, you can always stay on the sidelines. Do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.